The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the October 30th terrific Thursday edition of the Trader's Edge. I'm your host, Steve Rhodes, and hope that each of you are off to a great start of your day. Let's make sure that you and I, that we do everything in our power to have a terrific Thursday. And, of course, let's start our day off with one of my favorite stories, since we are near that time period of trick-or-treat Halloween out there. One of my favorite stories, it's the story, and I'm only speaking to this woman right here. It's a story about this woman out here, okay? This woman, she dreamed that she was being chased by a large, ugly, terrifying monster. In fact, everywhere she ran, the monster would always be right behind her. Now, in an attempt to get away, the woman ran into a canyon that provided to be a cul-de-sac. Oh, she was trapped. She was trapped with her back up against the wall, and the monster came closer and closer and closer. When the monster was within inches, just inches, she cried out, "What horrible thing are you going to do for me?" Well, the monster looked back at her and said, "That's up to you. This is your dream." Question. Have you ever felt as if your back was up against the wall and that a monster was chasing you? I say that is something to think about. Let's go back to the story. You see, it doesn't end there, because it was at that point that the woman could decide whether or not she wanted to be devoured by the monster, have the monster disappear, better yet, turn the monster into a prince. You see, it was her dream, and she had the power to determine how that dream would play out. You see, each of us, you and I, maybe not you, maybe somebody else that you know, but most of us create monsters from time to time. We view aspects of our lives differently. Different aspects. Perhaps we think of things that we're doing, we think that we're doing things wrong. Many people evaluate their lives and they just simply try to hide those things that they think that maybe are wrong. The reality is those are what we call things that are unique. In fact, those are things that are special qualities about each of us out there. The last time I looked into the dictionary, and it doesn't matter whether it was a Funk and Wagnalls or it was a Merriam-Webster dictionary, you go look up the word uniqueness. It says that it's a gift. It's a quality out there, and that means that you are special. So don't let those monsters scare you. It's your dream. Just go ahead and get rid of them. Hey, let's go check out the monsters in the marketplace. Let's go see if we can find any. There's no monsters chasing the Dow right now. The Dow is up 71 points. She's trading out at 17,045. The S&P down 4 points, trading at 1978. The composite up down 22. I keep saying up, I think, here. So the S&P is down 4. The composite down 22. It's just I'm not used to saying that here over the course of the last 10 days out here. The Russell 2000 is off 5 points. She's trading at 11.41. The DAX off 79. The FTSE down 32. Gold is off $21. Silver's off 72 cents. Light sweet crude back a buck right now. Trading at 81.23 out here. Leading the charge, the upside. Visa putting in a lot of the energy, most of the energy into the up spike that we've seen inside the Dow. It's really Visa, Goldman Sachs pushing things higher. CoStar Group up 12 bucks, up 8%. Baidu up 7.50. Harman International up about $6. Grand Canyon Education Lope is up $5. Vistaprint, BPRT, is up 10%, up $5. So we got a lot to look at inside of things. Moving to the upside. To the downside, we'll check in on Pacira Pharmaceuticals. That's off 15%, down $15 and change. Parexel International, Paraxel International, PRXL, that's down 13%, off $8. Gentherm down 16%. Emerge Energy Services getting the kibosh again, down $6 out there. Weight Watchers off 17%. So, yeah, we got a lot to look at. Of course, I would prefer to look at that which you want to look at. And that way, that means you have to just simply pick up that wonderful phone of yours. Give me a call at 877-927-6648. And together, you and I, we can go hunting around. Let's go start off by taking a look at what's going on inside of the Dow here. Let's start off by taking a look at the Dow, just the indice itself, and see what this is doing. You can't get any better than that with regard to coming off of a low and forming a significant, mucho significant bottom out here. If we take a look where the Dow is headed to, it's going to be headed to the swing point out here from September 19th. Eventually, we're going to get up to the 17,257, 17,350 mark out there. If we go from the swing point high to the low out here, what we're going to see is the Dow has made the 0.786 retracement. It got there yesterday. No reversal candle or anything. You know, even if you suggest, hey, QE3, is that where we're at? Came to a end out there, which it most certainly did. There's no real damage inside of the Dow, that's for sure. No reversal signal inside of the Dow either. So the Dow is headed up to that swing point. So long as it closes above 17,030 today, probably sooner than later, probably by Tuesday of next week, Monday, Tuesday of next week out there. So that's what's going on inside of the Dow. Imagine how strong the Dow will be when more of its horses start moving higher out there. Let's go take a look at what's going on inside of the S&P 500 right now. Trading out at 1978. Little doji candle yesterday that formed out here. Any lower close says, hey, maybe leaves are going to fall off of the trees here for a bit. Give you a retracement. Maybe get down. Maybe get down to 1960. Strong like bull out here. If we take a look at the B point of what will be the B point of the A to B equals C to the upside. That's going to be your September 19th swing point high. If we go from that high down to the low that came in here on October the 15th, you can see you're trading right now at a 0.786 retracement as well, 1976. So in essence, the Dow, even after having gotten shellacked off to a slow start, you got the Dow now having caught up to where the S&P 500 is in relation to its retracement from high to low out here. What does that mean? Well, the doji, from yesterday just means it's tired. And it should be tired. It's been kind of a historic sprint off of those lows. We haven't seen this very often inside of the marketplace. And when I say we haven't seen it very often, I'm talking about the large, huge, substantial, significant market breadth that was taking place on that move up out here inside of the S&P 500. We took a look at that during the last segment of the last show, the first hour of the Trader's Edge out there. Let's go take a look at what's going on inside of the NASDAQ Composite, up 24 points as we speak right now. If we take a look at the NASDAQ Composite, what do we know about it? It has gotten up into the swing point. Has actually touched the swing point from September 19th. The low is 4563, 4563, 445, 456. Yeah. It hit it on October the 28th, albeit with light volume if we were taking a look at the cues out there. Little doji in the window here yesterday, but more so an inside bar. This inside bar, if you take a look at the double meaning behind that candle, right, we have to be psychologists of the market out here. That's why it's good to understand the 6 human needs. It's really great to be, it's really great. If we take a look at the high here from yesterday, or 2 days ago, 45.64.29, 45, I take that back. It was not an inside bar. What the heck am I talking about? It was, you got the high was pierced by about 29, 39, 15 cents out there. Hey, screw that. I forget about going into the inside bar out there. Let's just go to the bar. That might even be the better thing. When was the last time you were at a bar at 10:15 a.m.? Salad bar. That's the kind of bar that I was thinking about. Have you ever had salad for breakfast? It's a great way to start your day out there. Yep, a good old salad. In any event here, it's just simply taking a bit of a pause out here. I don't see anything significant right now inside of the NASDAQ Composite. Let me tell you, huge gift if you trade it down to 44.48, 44.79. That might be your buying opportunity inside of the composite. She's going to go take out that September 19th swing point. Can at least go test that high at 48.10 out there. Maybe back off a bit, travel sideways. That's what's going on inside the NASDAQ. Let's take a look at the Russell 2000. Strong like bull out here. No give up at all inside the Russell 2000. This has, if we take a look at its retracements off of swing points as well, that would be coming off of the swing point out here from the trading session of September 3rd down to the low that was put in here on October 15th. It's hit the 0.786 retracement. So everything's really kind of lined up. Now, of course, one might say, hey, 0.786 retracement Isn't that possibly the C point of an A to B equals C to the downside? Inside of the Russell, inside of the S&P, inside of the NASDAQ out there. Inside of the Dow, too, right? So it really covers all of them. No, it can't be inside the NASDAQ. It wasn't at the 0.786 retracement. It was above it. And my answer to you is no. No, the market has put in a substantial, significant, it won't be a historic bottom, but it's the bottom. It is the standard bottom, but it's the standard. Hey, we're about tomorrow, October 31st. Do you realize that ends the 6-month unfavorable seasonal cycle out there? And do you realize that the bottom occurred within 3 days? 3 days. Tell me how that works. Within 3 days of when historically, on average, it should have occurred during that cycle. Put that in your cap out there. I tell you, it's the absolute honest truth out there. It's amazing how these markets repeat themselves. Look, I never want you to be a prisoner of your past, but the market, I guarantee you, is going to be a prisoner of its past. It's just about the probabilities of what goes on inside of the market. So the Russell 2000, first of all, it's going to make its way back into the swing point highs out here. The Russell 2000, number one, is going to be lead the charge on the way up. Number two is going to release all the information to us when it gets up to those swing points out here, back from March of 2014, back from July of 2014. Hey, if it can't take those out, then maybe we got continued consolidation out here. But the Russell 2000 is on its way back out to the 1193-ish type range out here. And you should just be hoping, praying for some kind of retracement in the marketplace to be able to get in on the long side out here. That's what's going on inside of that indice. Let's go check in on gold and silver out here. You've got gold down $21 right now. Gold here is at a 0.786 retracement. Speaking of the devil out there, that 0.786 retracement. Now, in the case of Goldilocks, I do believe that what it is forming is an A to B equals CD to the upside, with the A point being that low from October the 6th out there, and your B point being out here on October 21st, and today being the C point. I believe that the response inside the currency pairs was overdone, overcooked. Most people are not going to pick up on it. Of course, I could be wrong out here. It would not be the first time. It will not be the last time out here. But at this stage of the game, I am sticking with the game plan that gold is in the process of forming a very significant low out here. We got to see gold move up to 1271, then 1291 out there. No reversal signal here on a daily basis or anything, but it did make its 0.786 retracement out there. Let's go check in on light sweet crude. Let's go see what it is doing. It's back at $1.06 right now, trading out at 81.14. As we take a look at its daily chart out here, we're going to see about light sweet crude. It's just camping out along these lows out here. So long as it stays above the price level, well, you got two hammers out here, one on the 15th of October, the other October 27th. Those lows are very important for Texas tea, light sweet. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And hey, one of our listeners was listening to my story, my monster story, and their question was, this is a great question. I was waiting for somebody to ask me this question. The question was, can you have a cul-de-sac in a canyon? Now, it's my story. I get to tell it. And I kind of take that terminology of cul-de-sac as a dead end. I don't know how else. I don't even know if they're... So I don't know the answer to that. I always recognize it when I tell that story. I don't know, do I say it's you ran into a dead end? If I say ran into a dead end, you're kind of inside a canyon. How are you going to even visualize that? That doesn't... But if I say she ran right into a cul-de-sac and her back was up against the wall, you get the visual, right? Now, maybe one of you out there can answer that question for me, whether or not cul-de-sac can be used as that term for a dead end, or maybe there is some other terminology that I can use out there, but then I will forget the story. But thank you for listening to those details. Hey, speaking of details, if someone were to ask me, is there anything in these markets that scares you? If you were to go find a monster out there, where would that monster be? How's that for a nice little... Was that smooth as a transition or what? I don't even know where that came from. I pulled that right out of thin air. Hey, if we take a look at the high yield bond fund, what I like to use out here is I like to use the Western Asset High Income Fund. Our man in Thailand, he likes to use the SJB ETF out there, but both basically do the same thing. So I've got them both on my screen out here. And so for Mike in Thailand, we'll leave this on the screen in case he ever calls in and we talk about this. It's actually the only correlating chart. I like to take a look at divergences that occur out here, divergences that in the past have had meaning. And right now, typically these high income bond funds, they will go ahead and they will track right along with the market. Now, not that they haven't, but what I have noticed, and now I've kind of deferred this here because of knowing that the FOMC, was coming out yesterday. So it's really important for me to watch how this really trades from here. But in the center chart on my screen, the center line chart out here, the top portion is the S&P 500. The center, the blue line, that happens, to be the HIO, the Western Asset High Income Opportunity Fund out there. And if we take a look at, and speaking of opportunity funds, for those of you in the Tampa area, Tom O'Brien is serving up dinner tonight. And so go over to the homepage of TFNN.com. You can sign up for them. You need to do it early. You got to RSVP for these functions. But what a great way to spend an evening. You can spend it with Tom, and he's going to be serving you dinner. That's a beautiful thing out here. And so you can, test out, you can understand what's going on inside of the Tiger Real Estate Opportunity Fund and all the great opportunities there. Now, back to the charts out here. As we take a look at the S&P 500, we can see that it has been moving higher. That's clear. Everybody knows that, and there's nothing new there. But as we take a look at the HIO out here, and I'll draw the line. Let me just get my arrow out here. It's starting to make lower lows and lower highs out here, and that concerns me a bit when we start to see those divergences. So if somebody were to ask me, Steve, and you probably didn't know this, if there are any monsters in the marketplace out here, I would have to say that the monster is right now inside of this. This is the only diverging chart that I can find. So does that mean that you pack it in, you say, hey, that low was not a significant low and the Santa Claus rally is over? No. I've got a model that's been expecting a pullback here. I mean, if it doesn't happen, it doesn't happen. And it just gives me one more signal of just how gosh darn strong. But we don't really need a whole lot of signals to tell us just how gosh darn strong the market is. We just have to go take a look at the summation index out here. We just need to take a look at the Dow, take a look at the New York Stock Exchange. Take a look at the New York Stock Exchange. That's a better way to take a look at it. It's had rising price oscillators out here, and that is just simply it's a signal of an initiation move, not the climax type move out here. If you want to see a market when it starts to make highs and the summation index is moving down, well, that's really what was taking place as we saw the highs back in September. All right, in the case of the New York Stock Exchange, it wasn't the 18th, it was September the 4th when it made its highs. And when it was doing that, I'll just go ahead and put those lines on the chart. Let me just change over to red along the bottom. Where's my red line out here? This is what you want to see if you start to see the markets move higher and you see the price oscillator making lower highs out there. That is what you want to see. You can come back here inside of the market. And each of those times, those would give you reason to have pause. But if we take a look at longer-term charts out here, and well, first let me just do this here before I switch over to a longer-term chart. So what's the message here? Message here is what we've got an initiation. And that music comes on early, does it not? No, it's really the end of the next segment. We get back. We'll go take a look at the NQ on a 30-minute basis. Just want to show you the resistance out there that's still in place today. Then we'll take a look at the long-term charts. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 92, S&P's off 2 points, composite down 16. So a couple things here to focus on and pay attention. If we go check out the volatility index, the VIX index, as you know, Stevie likes to use it by gauging the liquidity of the market by understanding where is the VIX trading in relationship to the 50-day exponential moving average. Well, the 50-day exponential moving average is priced at 1612 as we speak right now. What you're starting to see here yesterday, as an example, we got price up in the VIX, got as high as 1628. Closed out at 1515 out here. So it rejected that 50-day moving average. That became resistance now. Same thing occurred on October the 28th. So far here, intra-session high has been 1575. So long as the VIX trades below that 1612 level, it's a slight little nuance out there. Tells you plenty of liquidity inside of the marketplace. Markets, the S&P does only two things when the VIX is below the 50-day exponential moving average. It either goes sideways or it moves higher, but it doesn't go down. That is for sure out here. So you want to focus and pay attention to that. If we take a look at, during the first hour, we looked at the 30-minute chart here for the NASDAQ. We want to pull that back up on our screen just to give you an update as to what's going on here. First, we took a look at the as the NASDAQ, as the NQ was making a low at 8 o'clock this morning. It was completing a 1-to-1 A to B equals CD to the downside. And I do want to say thank you to each and everyone that attended last night's workshop that eSignal hosted out there. It was a great time. Huge audience. I know a lot of folks, the majority of folks, are watching it on the on an archived version out there, I believe. But 700 people, folks. So that was a nice attendance out there. If we take a look at the A to B, so thank you to each of you. If we take a look at the A to B equals CD to the downside out here, our A point started out here at 10 o'clock yesterday morning. That was out at about 4,096. Your B point was this big, huge hammer candle. This was the FOMC hammer candle out there. It doesn't get too much larger than that. That was your B point. That was down at a price point of about 4,054.75. Your C point was a retracement up here into about 4:30 this morning. Makes the 1-to-1 A to B equals CD. Does it with a hammer candle. Now what we've seen here is we've seen a bounce off of that level. Now what we talked about during the first hour was the significance here inside the NQ to get a feel whether or not the market is really going to bounce or we're going to see some kind of retracement. I think we can get that from the NQ because I consider the NQ to be stronger than the Dow. The Dow is just playing catch-up here. And if we take a look at the NQ, what we said is the real key level here is 4,067.60. That's our TAS market profile high. That's our resistance level. Now, I can tell you that as the hammer candle was being formed, right after that hammer candle was formed here at 8 o'clock, the very next candle is when the TAS market profiles of a new box had actually formed out here. The formation of this box, to me, communicates that the buyers have got control of this area here. We did see just a slight close above that market profile high of 4,067.60 out here during the last trading session at 10:30. Right now it's under attack, just meaning that an old resistance area is being tested to see if it can act as support. So when we go off the air at 11 o'clock, if the NQ is trading above 4,067.60, you will have had your second test of a resistance area out there, and that would suggest that the market wants to, at least the NASDAQ, wants to go ahead and join the party of Visa, Chevron, and anything else that's inside the Dow that is trading higher out there. If it can't, because it was just ever so slight. When I say so slight, the actual candle close was 4,068.25 versus 4,067.60, so it's just a small little thing out there, but that is, in my opinion, where you want to pay attention to. The reason is because, since yesterday's action, the A point of the A to B equals CD is the downside. Those red lines that have been drawn on our stock chart out here, those TAS market profile highs out there. And don't forget, we kick things off at 8 o'clock every morning. John Logan goes ahead and starts the show, the innovator of these TAS market profiles that I certainly love to use as road marks, as part of the triptych as we're watching price move along the stock chart out here. If this level here fails, what we should see is price actually pull back to 4,051. Support ought to be 4,047. The hammer candle is just below that at about the 4,043-ish type range out there. Those are the areas, in my opinion, to be watching for what goes on inside of the market, and that is using a 30-minute time frame out there to help us gauge what the market actually wants to do. Now, let's go take a look at some, because we're almost near the end of the month out here. Let's go take a look at what some of these monthly charts look like for the indices out here. Let's start off with the NASDAQ composite on a monthly chart. We can see right now trading at about the 45.30 level. There is absolutely nothing bearish about this stock chart. Now, it made a higher high in the month of September. It did it with less relative weakness. We did not get a reversal signal. There was the threat of a reversal signal, but that threat has now gone. We're now moving into the favorable seasonal cycle out here. I would expect, other than some retracements, some retracements that you want to take a look at buying, the NASDAQ is going to go ahead and motor on up to its 2,000 high out there. Maybe in the five. Oops, I didn't mean to shut that down. Let's go take a look at the Dow Jones Industrials out here. So let's go see what the Dow is doing on its monthly stock chart out here. You got a doji forming here if it closed at 17,061, a real doji out here. Again, it too was making higher highs in its monthly chart with less relative strength out there, but no reversal signals in place, and most certainly there is not one right now. It could be a doji, can't be a hammer candle out here, but it could be a little doji in our window. So nothing bearish about the Dow, that's for sure. And you can see with it motoring on today, it wants higher price out there. If we take a look, God, I keep shutting that down. I don't mean to do that. I got to, let's go take a look at the, let's take a look at the NDX. Not going to be any different than the composite, really, but let's go take a look at it anyway. We take a look at it. Nothing bearish at all about the NDX 100 on its monthly chart. You know, it has moved through this unfavorable seasonal cycle, you know, and it said, the heck with you. I don't really care. Oops, I almost did it again. I almost shut it down. Caught myself, though. That's the NDX. How about the New York Stock Exchange? The New York Stock Exchange, the beauty about the NYSE is that it has tested its swing point high. And that I say that swing point high, let me just draw the line across here. What it tested was the, I shouldn't say swing, that is a swing point, the 2007 high. And that 2007 high right about there, right about that, the blue line out here. So, and that's a huge, that's a 6,000 point consolidation. Says that the New York Stock Exchange wants to get to 16,000. Not today, not tomorrow, but in our lifetime, it does. That's what it wants to do out there. When you break a consolidation, it's called a measured move, and that's really what's in play out here inside the NYSE. When you break those consolidation patterns, you typically like to see markets pull back and test those areas and prove that they want to move higher out there. Well, you know, this was the time period. This month, October, was a time period for that to occur. We can see that with the huge move down that was rejected on October 15th, October 16th out there. New York Stock Exchange on a longer-term basis, on a monthly basis, it's just like in a little bit of a cautionary mode. That's the yellow light that's on my screen, but that's it. Otherwise, the New York Stock Exchange just came back and tested out the top of a breakout area. That's all that she has done. I almost did it again. Caught myself. Let's go take a look at the Russell 2000, right? The Russell 2000, we're just going to pretty much see here just simply like a consolidating pattern. Of course, what it's actually done this month here, it's created a bullish reversal signal. So we got bearish reversals. That just shows you how powerful the consolidation is. We have bearish reversal signals at the top, bearish engulfing candles, evening star candles, all up at that 1209-ish type area. And at the bottom, we've got bullish formations. That's what's taking place here as we speak this month. We got a nice bullish piercing candle out here. So the consolidation lives on. You take out those highs, 1350 is where the Russell 2000 wants to head to. And with it only being the end of October and Santa Claus rally lasting through December 31st out here, that actually says that the Russell 2000 could actually do it. It can get above these highs. There's enough time for it to do it as it picks up the leadership. There, I did it. Didn't mean to do that. As it picks up the leadership rollout here. So that's on the Russell. If we take a look at the semiconductor index here, the SOX, boy, I haven't looked at this for a bit, but didn't they get nailed here during the month out here? They did. And they formed an evening star. That's a 3-candle configuration as we speak right now. But you know what? It rejected those lows. There's really, even though it's got some resistance, that's all it is resistance. Getting above the high of September out here, 659.54, will bode very well for the semi. So not, as I look at this, even though it's a bearish reversal signal, I don't see anything bearish about the semiconductors as we speak right now. Let's take a look at the S&P 500. Let's go do that. If we look at, come on, there we go. S&P 500, absolutely, positively, nothing bearish about this stock chart. Yeah, in the month of September, it made higher high with less relative weakness, but no reversal signal. There was that opportunity this month that has gone by the wayside out here. Let's take a look at some of the sectors inside of the S&P 500. As long as we're inside our longer-term charts out here, let's look at the number one weighting structure, the XLK, the technology sector out here. So let's go see what's weak, what is strong out here, what the signals are, what message messages we have. We're looking at the Rhodes momentum indicator signals out here. Nothing is weak inside of it. Just shows strength inside of the XLK. No divergent patterns of any sort. No bearish reversal signals of any sort inside the number one weighted ETF inside of the S&P 500. How about the financial sector out here? Let's go see what that is doing. The XLF. I think I might have. There we go. There's the XLF. The XLF, it did make a higher high last month with less relative weakness, but no bearish reversal signal here. This looks like strong like mole out here. So the XLF, it's going to go ahead and motor on to higher highs out here. If we go take a look at, that's the number 2 weighting structure, I believe. How about that healthcare sector? XLV. XLV, I don't believe, needs a checkup. Its health is about as strong as you can get. I mean, can you get any stronger than this? The XLV has motored on to newer highs, 3rd weighting structure inside the S&P 500, newer highs in the month of October, and that has abated any kind of price relative strength divergent pattern out here. Talk about the strong, this really strong-looking ETF inside of the S&P 500. So we got strength there. Let's take a look at the XLY, the consumer discretionary area. Let's go see what it is doing out here. Now, consumer staples, consumer discretionary, they can be areas where people will run to during markets that are going to pull back out here. Again, nothing really. The only weak potential weakness was this little dark cloud cover from the month of September as price was moving higher. But again, it is in the light blue. When you see a light blue area on your screen out here and you're looking at the Rhodes momentum trading indicators, it is blue skies ahead, folks. Blue skies ahead on the monthly charts. That's looking at the XLY. Let's look at the energy sector. Okay, this is going to be interesting, right? What's the energy sector going to show us on a monthly chart out here? Because that got just simply the whack-a-mole. That got the kibosh to the downside out here. And in this case, what we know is that it's held this now this blue line going across my chart out here. To put it in perspective, that is the 20. That's the 20-month blue line. I think 20. Let me see here. Let me make sure. 50 is the 50. So that is the blue line happens to be your 50-month moving average. For whatever that is worth out here. The energy sector here is still, in some trouble. That's the only sector that's really in a bit of trouble out here. And I would say we would want to go nail down, go look at the daily charts and try to understand what's going on out there. But so the energy sector, which has fallen to like number 7, I think maybe, inside of the weighting structures inside the S&P 500. Let's look at the consumer staples. I mentioned that earlier, the XLP, not XP. Let's go take a look at the XLP. Okay. Come on back. Here we go, XLP. See, if you type in the wrong signal, the wrong symbol out here, you get into real trouble. Now, back at the ranch, back at the consumer staples area, bullish as can be, no bearish signs there. XLI, the industrials, we're just simply going to go ahead and finish this off here. See what this shows us on a monthly basis. No problem there. Nice and bullish. Let's look at the XLB. Let's look at the materials. Then we'll finish it off by looking at the utility sector. This here also just in a cautionary zone, but really not that bad inside the materials sector. And let's look at utilities out here. Utilities should be doing very well. As we look at the utility sector here for the month, we can talk about motoring on to higher highs. Now, doing it with some less relative weakness out here, but, it's going to take a whole month and for that to change out here. So really, the sectors inside of the S&P 500, you have to admit, they look pretty darn strong out here, enough to continue motoring on higher. Doesn't mean that it's a straight shot. We've seen the straight shot that was coming out of the October lows out there. And so that's what's going on inside the markets. Let's go take a look at what's going on inside some of these individual stocks out here. We'll do that when we get back from the break. Let's see. Percentage-wise, moving down, what do we have? We've got Pacira Pharmaceuticals. PCRX is a ticker symbol, down $14 out here. So we get back to this break. We'll go try to figure out where this is trading to. This is Steve Rhodes. This is TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 95. S&P is flat up $2. No big deal. NASDAQ down 19. Russell off $3 out here. And let's go take a look at the currency market. Let's kind of close this thing out here versus maybe looking at Pacira Pharmaceuticals out here. And when we began the first hour, we were taking a look at the euro, taking a look at the euro futures. And one of the things that I had mentioned was If we take a look at the A to B equals CD down pattern that formed out here, the A point on this was back here at about between, this is a 120-minute chart, so a 2-hour chart, so between 2 and 4 a.m. on October 21st. Your B point was down here at about the time frame between 2 and 4 in the morning on October 23rd. Makes a 0.618, a 70% retracement to form that C point. And that took place yesterday, October 29th, between 10 and noon out here. Obviously, we had the FOMC response. That's that wide-ranging bar, that candle session from 2 to 4. Then the bars just really kind of gradually got smaller and smaller until it formed a little hammer candle down here. That took place between 4 and 6 o'clock this morning. Then we had a key reversal session that took place here at 8 a.m., between 8 and 10 o'clock. So between now 10 and noon, we're halfway through this bar out here. We're seeing some additional follow-through. So you've got you've got a confirmed A to B equals CD to the downside that has now completed. You've gotten your buy signal here. And this says that the work to the downside inside the euro is over. Now, fundamentally, and even theoretically, I can't even come up with what is it that's going to move the euro higher out there. It's going to be interesting to sit back and watch and see how this plays out. And, of course, many of you out there could say, hey, what the heck are you smoking early in the morning out here? And what I am smoking, it's called the CFTC COT date out here, and trying to understand what the large commercial traders are doing, presumably the smart money out here. And this is what I know. Even as the U.S. dollar index got a bit stronger last week, this is a weekly chart that we're taking a look at. Data doesn't come out till 3:30 tomorrow afternoon. What I can tell you is that the large commercial traders, the smart money, upped their net short positions inside of the U.S. dollar index. They're getting ready for something out here, and each time that this chart has gotten up to these levels out here, you can go back into this, because this is a weekly chart, back into the 2010 time frame out here, June of 2010. They had ramped up. They were ramping up their now it's like a big, huge ship out there. The problem is that you can't really use it. You can't use this as a timing tool out here. But this is what they are doing out here. So it's going to be interesting to see how this all plays out. Now, when that happens, that is going to bode well for pretty much all commodities out there. Gold, silver, light sweet crude. Hey, natural gas. We mentioned natural gas, and our man Z in the Tiger's Den had noted. I think they came out with whatever their report was at about 10:30. Yeah, so they've come out with their inventory report, whatever they're going to come out with. What natural gas has done, here's a 120-minute chart here. Natural gas has completed an A to B equals CD to the upside. This 120-minute chart, it's the first one since September 30th out here. So it's the first one for the month out here. So, we're coming into that season out here. So now we see maybe natural gas can pull back to the 3.757 level. This happens to be the December contract that we were looking at out here, but it looks like natural gas may have changed its trend out here, forming its first A to B equals CD to the upside. So, folks, Dow's up 113, S&P just turned slightly green. Just make sure you've got stops in place, but most importantly, stay tuned, because our man Basil Chapman is up next. After Basil, we've got Larry Pesavento. After Larry, we've got Daryl Martin, David White, the Tom O'Brien Show, Andy Heck from 5 to 6. Have a great Thursday. Look forward to seeing you bright and early tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.